Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. In the past 5 trading days, the Australian dollar has stayed above the crucial support level seen at 64.5560, and from there the market is slowly grinding higher. As the new week begins, it is assessed that the market bulls will eventually gain momentum and increase on towards the region that's seen a key point at 66 figure 35, also note as the 60-day moving average. While on the other hand, the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains unchanged at 104.10. Traders are now eagerly awaiting the release of the January Consumer Price Index, also known as the US CPI, which could give some impact on the market significantly this week. Along with this, we receive also the Australian jobs data and hear from Federal Reserve officials, and hopefully we may even get a bit of an idea on the first rate cut for 2024. So viewing the technicals, as I mentioned, any pullback likely to be short-lived, with the base holding around 64.5560. The immediate target holds around 65.35 to 65.65, and then the objective seen around the 60-day moving average at 66 figure 30. The euro for the last 5 consecutive days has held relatively well as the dollar index continues to consolidate around that 104.10 level. Regarding economic data, as I mentioned, all eyes will be on the US CPI data, and along with that we also get the PPI. In the forecast, the year-on-year anticipates the US CPI inflation is to decrease to 2.9% this month from previous of 3.4% in December, marking the lowest since early 2021. The core CPI is expected to remain steady and hold as previous at 0.3%. Since rebounding off that key level, which was at 107.1525, all eyes look towards that topside target of 108.4550. A break there should give additional momentum and see a rise on towards 109 to around 109.7090 and then reassess. Technically, we are firming up, so this does support the bullish case. For dollar yen, we have a doji. This suggests the demand is slowly depreciating. Along with that, indecisiveness. Keeping an eye on the support level, if we see a break of 108.80, this will give further indication to the downside and reinstate the move to 147.70. Any upside potential, still keep an eye on that key level around 149.60, as a break there would trigger further stops and in the short term leave me neutral. Sterling still maintaining its bias to the upside since posting this Dragonfly Doji. I like the way this pattern is shaping up and therefore could see further gains into this week. A look on towards the region of 126.35.45 and maybe even on towards the region of 127.15.25. Reassess from there because a break would give further strength on towards the 128 area. A little bit weaker when it comes to the recent price action for gold as the market slips back towards the base seen around 2016-18. From here, the market should stage a bounce, maybe looking back towards that topside target around 36 and on towards 42. Wrapping up with oil, well, the market still remains relatively firm after posting a 6% rise last week. And reinstating this upside from the break of $74 a barrel, now looks towards the initial target of 78.5 and maybe on to where this measured move is from this inverse head and shoulders around $81 to $83 a barrel. Well, that's a wrap for the start of this week. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoyed the great start to the day.